good afternoon, good evening, everybody. It is Sunday, January 21, just coming on nearly 4 p.m. over there on the East Coast. All that bragging I was doing about the wonderful weather that we have over here, I got caught in a rainstorm out on the motorcycle up in the mountains yesterday, driving home, cool weather, soaking wet, and yep, I've caught the flu, and I'm running around 103 right now. Body aches, all of it. So yeah, I'm in there with you. Uh, Big earnings week, obviously. Big start to earnings week. This isn't the big week. The big week comes next week, which also has the FOMC meeting. This week on Monday, there's nothing except a couple of auctions over on the U.S. side. 11:30 in the morning. But then Monday night, you get the Bank of Japan's rate decision, which has been stagnant for decades. So commentary more important than any kind of decision. On Tuesday, things kind of kick off. You got some bigger names in the morning. Then we get Netflix after the market closes. Netflix typically likes to report and then spike upwards. And then we get a pretty nice trade back filling the gap back to the downside. I'll cover it in the email on Monday about Netflix because I just can't go over everything right now. On when is this? On Wednesday, we get a little bit more data, or on Tuesday, we've only got a couple of auctions. We get Netflix earnings. On Wednesday, we've got, again, more earnings. We've got the S&P PMI coming out. We've got crude as well, always, and we get Tesla after the market closes. Now, I've covered Tesla pretty extensively on how it was heading down to that 207, made it there finally on Friday, and fractional possibility from the view, like I shared a couple weeks back. Good chance it can head down to 180, 160, but I'm not playing around with it ahead of earnings. But more importantly here, on Thursday, on Thursday this week, when Netflix have already reported, Tesla has already reported, you start going up into people that fly planes that burst into fire reporting on Thursday morning. And then you get Intel and Visa. Visa I talked about, but I'm not really in love with Visa only because of the weak option flow on it. On Thursday, we have the ECB rate decision prior to the open on Thursday. We get jobless claims. We get U.S. quarter-on-quarter advanced GDP. We get durable goods. We get PCE. And then we get all of the big data coming there on Friday, which is Jerome Powell's favorite PCE price index year over year, month over month. We get consumer spending, personal income, blah, 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 and everything's out by 10 o'clock on Friday. Now, on Thursday as well, January 25th, we have our full moon. So, very much like April and May of last year, full moons have been putting in a high and then not breaking down significantly below that high. January 25th, we've got our full moon. Get ready for it. It's coming there on Thursday. So, QQQ, NASDAQ, that's what we're sticking with here on the weekend update, having done the S&P yesterday. So, strictly looking here back to December 20th when we first went into the 410s, broke above that 408.51 from November 2021. We had a couple of closes there, and everything was really, really working out well earlier in the week. C411 gets short. C411 gets short. We had that big spike up there on Thursday, well up into 413. The 409s worked. A lot of guys took profits on it. Dipped down there to 409.16. Spiked right up in the afternoon, as you all remember. Friday, completely out of everybody's hands, being OPEX Friday, the gap up, the massive algorithm move to the upside, and here we are. We're at first time ever closing up here above 411.50. closing at 413 on Thursday. Now we're up here in the 420s. Like we were saying earlier in the week, how you've had these red closes over on the NASDAQ, but green closing above the open Wednesday and Thursday, or sorry, Tuesday and Wednesday. And that's why on Thursday I was saying it's do or dump. Do or dump. And we wound up getting a 2% day there on Friday. So data wise, looking at it for what it is, for me, just only because, I've kind of like a fantasy baseball play, player. I'm so dug in, kind of like a massive football fan or baseball fan who knows everything about their team. They know the AAA, they know AA, they even know the rookies that are getting, drafted and starting out, which different single A leagues they're playing in. You want to be that kind of fan when it comes to what it is that you're trading. That's why, you come over here, you create your spreadsheet, you go over, simple one is Yahoo Finance. And every day, all you're doing there is just copying that and throwing it over here into your, boom. It's that simple. You come over, collect your data from the day before. It's a very simple process to update this. And what this will initially do is not only provide you with your data, but it will get you addicted. It will get you into breaking this down in every which way. So, point I was making is, for me, being able to look over here, seeing, okay, so from the bottom to February, 56, 54, 20%. February high, July to March, July to October, the November bounce. I can look at this and cleanly see already an image in my brain of, okay, I see 5 waves. 1, 2, 3, 4, 5. I don't even have to think about it. So I have a broad view idea as to where I am. I have a broad view idea as to, okay, so let's start looking at the bigger, broader picture, because playing this for nickels and dimes in the short term, like I put out in that 409 email, it's a very, very close expiration. So, for those who can think outside the box and think about the bigger, broader view that we've continued to be talking about here as we've been going basically nowhere for a couple of weeks, that bigger, broader view is going to pay you a hell of a lot more than playing in this short term nickel and dime area. Again, 344.08, the retraces, going back to, sorry, that's incorrect. It is, what is this from? 344.08. No, this is from the 342. I had the number wrong. 342.35 is your low back there in October. I typed this in wrong, like I said, having the little flu that I've got. 342.25 is what your number is. That is your low from October. So, anyway, moving on and getting into the meat and potatoes of this, and I'm going straight over to the charts, and I can only handle the NASDAQ for now because, like I said, I am not in there. Looking here at the NDX and the NASDAQ are not the same. I need everybody to understand that. The NDX is your technology stocks. In fact, we'll go over and pop that up here. I will bring it over quickly. Give me 1 second. I apologize for not having it already. Copy this, and I'm bringing you back onto the browser here. All right. This is your NDX, okay? Your NDX is 100, supposed to be, companies. Get that out of there. 100 companies, and I need that off. Come on, man. Whatever. I'll minimize it. So 100 companies out there. It's a little bit more than 100 because it works out to be 101. Walgreens Boots being the weakest as far as it goes down to weight. But you have your Apple, Microsoft, Amazon, Nvidia, Broadcom, Meta, Tesla, Google, Costco, AMD. That's your top 11, where remove Costco, remove Broadcom, only because Broadcom is very thinly traded and it's $1,200. And you have your 8, 7, call it, names, and you look there going down on your weight, which I'm not going to go and calculate it for you, but calculate your weight, add those all up, and you're nearly looking at around 50% of the QQQ is based out of these roughly 7-8 names. Tesla being the dead dog of everything. Again, this is what makes your weight. This is your weight. And as you can see here, big move over here on Apple with that bounce obviously helped things out. So bring you back over here so I know where I'm at when I go back in there, and here. This is the NDX wide view from its initiation back in 1985. Very clean move. Cycle 1 up to the dot-com highs at 48.16, nearly 83% decline into the 2002 lows. 2009, when the S&P bottomed out, fractionally lower than where it was in 2002, the NASDAQ did not. And at the same time, the NASDAQ did not reach back up to its highs, which the S&P did. And that was because other sectors were involved in the move up on the S&P versus the NASDAQ, which was a dead donkey. Back here around 2006, 7, 8, 9, 10, 11, 12 is when you started getting your big IPOs. Your Google IPO, 2004, if I recall. Amazon, Tesla went out here in 2010 or 2008, something like that. Meta was in 2012. Here's your bounce going in here. This is your 1, your 2, call it your 3, your 4, and this is looking at it from a bullish perspective of this being cycle 3. I have a couple of problems with this being cycle 3 that we are in right now. A few problems. So we'll just stick with it being that it is cycle 3 and, forget about that. But in gray, I have over here where we are in cycle 3 topped over here in 2021. This was our cycle 4, which was a 38.2 retracement back to the 2002 lows. And this is cycle 5. This matches up with the S&P, matches up very cleanly with the S&P 500. And from where we are in a perspective as to how far have we moved and where are we going, a very clean looking coming off the triple bottom zigzag going nowhere, unlike the S&P, which had higher lows. Start here off of that 38.2 retracement back to the 2009 low, 2002 lows. 1, 2. This is January, December, going into February, going into the March lows. Very clean 1, 2. Nice clean 3, almost to the 200 extension going up here into July. And then your zigzaggy drop, not overlapping anything of any significance on the drop here into October for your 4, and where we currently are now being the 5, which, looking at it from a big broad spectrum, we should not be completed on this 5. We should be looking at a dip and then one more bounce to the upside. And that should occur very early this week. Fractional, little bit left on the upside. 261 extension being up here at 17,478. Now, again, the bigger, broader view. This is your NASDAQ composite coming out since inception, which was prior to when I was born. Your big 1, your big 2, and again, no new higher high as you went into the 2007 crisis. Your essentially reclamation of the 2002 lows back over here in 2009, and then you moved off with the S&P with everything else. So again, looking at it from a 1, 2, cycle 3 having topped over here in 2021, your big cycle 4 bottom over here in 2022, and where we currently are, again, looking at it from the view that it is, we are very, very, very far off from the existing all-time highs from back here in November of 2021. Very far off of it. which again allows you to understand what everybody's discussing this weekend, which is how only one sector made new all-time highs. One. And that sector being technology. No other sectors anywhere on the planet made new all-time highs on Friday other than technology. You've got sectors like the banks, like utilities, energy, cyclicals, consumer staples. They're 20, 30% from their all-time highs. And that brings this NASDAQ composite very much into perspective to let you understand that this is very, very much a bubble that we are currently in. So I'm bringing you back over here onto the NDX before I go into the QQQ and the NASDAQ, and a very important, call it, I'll go maximum weekly here because I want you to see the big picture on this. So a very important announcement at the end of the video. Here is your history going in cycle 1, cycle 2, this being the major big bottom. So what I'm doing here is zooming in to show you the perspectives. Now, here's your big move off 2002 down into 2008, 2009, going in here to the big, big high of 2018. And in white here, I have your retracement being your retracement back down to 2002 up to this high. And I want you to notice how, as you went into the December 2018 lows, you took this out. Come over into COVID. And again, into the perspective as to why this matters. Here's your COVID high. There's your drop into COVID. And as you see here in white, this one here, will remove this so it doesn't confuse anybody. This is your 23.6. Here's your 38.2. And again, how you fall right in between the two on that big major drop. So now that that's discussed, I'll remove it. Here's your big move into 2021 and where you bottomed out. Bottomed out in October exactly at the 38.2 retracement to that 2009 low. So looking at this from a big, broad point of view, and the reason that you could turn around and move this out to the new highs, which very likely is going to be maneuvered a little bit higher, and we'll just make it perfect 7.21 so that there's no mistakes about pennies. And here you see you've got your 23.6 retracement being right here, fractionally below where your August highs are. And you have your 38.2 retracement fractionally moved higher than where it was because you have a higher high. So on a broader point of view, your 38.2 retracement would take you all the way down to the year's lows. Your 23.6 retracement would take you fractionally below the October lows, but still above where you were as far as your highs over here in February and your pre-AI highs over on in March. To put that into the QQQ view, and that's what you're looking at right there, is that zone. This zone right here, this 321 to roughly right around that call it, right in this area, this 323 down to around 315, because this was a very choppy area that we were in. So now I can move you on to the QQQ and show you again, looking at those, where are we? Just looking at the spreadsheet and being able to see, okay, here, look at what we've got. Okay, I see it now. I see it. You come over on your chart and you can see it pretty clean. 20.76, 9.32, 36.04, 11.76. Here we are, up 23%. We're up 48% off of the March low, 66% off the 2022 lows. And again, looking at it from a detailed point of view, which is the way that it should be looked at, is look at all of these gaps that are here to the downside, just going to the October low, let alone when we introduced and started putting AI. Now, I don't have my gaps that are down below 354, only because I wasn't a detailed, daily focused QQQ where I cared about the QQQ gaps, because the QQQ gaps and the S&P gaps were always in line with each other. So when one filled, the other one most likely did fill. But now, since we have completely separated from one another, the QQQ matters. And I've got my QQQ gaps going back here, back to March, which come down here to around 290. Now, adjusted, which is a very simple, very easy Fibonacci that people can do, you type it in as pullbacks. You start out with your beginning point being 0. I haven't changed this as of yet because I wanted to change it now, with the all-time highs being 421.97, with that as the after hours high that came over here after the close. And you have your 0.05, your 0.1, and your 0.2. And you throw those up on your chart, and minus 20% would take you back below the October lows, right down to around 337. Minus 10% would take you here right around the September highs, right there at 379.73. Another one of those ones that you could do on your spreadsheet, but if you want to have it up on your charts, same thing. A 5% recline, 5% drawback would take you down to around 401. So where we're at from this move and this decline being a 1, 2, 3, 4, and this being into the 5, we can zoom into where we're at right now. And looking at it from every view that we can possibly look through, with our 1, 2, very clean 1, 2, 3, 4, 5 for our wave 3. That being our wave 4, the decline that we had there going into the beginning of this year. And now looking at it as a 1, 2 with the 3 having been tagged. 422, 423.50, 424.50 all make sense for this to top out for our wave 3. Wave 4 decline should not, cannot break down below that 413 level. And then after that, as we go into next week, with next week being the big earnings week, fractional possibility that you could see a move higher up into this 425, 427 region. And that should be the end of moves for any kind of upside. As I shared on the S&P, you have the seasonality where you are not only in the even years, but you're also into that January, February period. So everything is aligned with it, and what you're looking at here is a fractional amount of upside potential, call it couple of days, possibly getting a little tiny bit higher, and then after that, your decline begins. And your decline begins where taking out prior highs are your first and foremost signals. Taking out prior lows, not necessarily your major lows, but even just your fractional lows, with this one being the big one here, right at 402, 404. That's the big area there, that 404. Then you start to get your momentum to the downside. And this is where you start to see people getting short. People will start getting short on a break below 404. They will get very strongly short on a break below 393. So you want to get ahead of it. You want to get into it when everybody else gets into it, which is what FOMO was named after. These in red are your gaps going back to the October lows, and you can judge them and look at them in any way you like, with 10% being right here, right around 380, 380 being the big spot on. So I'll leave you here with the NQ. The NQ, again, looks the exact same. Very big, broad spectrum with your big gap from the options or from the futures rollover after the dividend at the quarterly being over here unfilled, which is still my primary target. I don't think that we're going to get to it at the end of January, but we will wind up getting to it in the early part of February. No question about that now. But one of the ones that I want to bring you out here just to show you from where it's coming from here, we're here at this 300 extension. This 300 extension being the major move coming off of the 2016 lows, then into our big highs here in 2018 and our 2018 bottom. And I look at this still as one of the major waves and major starts of the waves. And we're just coming up here to the 300 extensions. I've always had that as a big, big spot there with that 2018 low having not been taken out over here on COVID. You've got a nice support level way down here, way down at 10,000. Very nice support channel coming off of all of these lows, way down here at 10,000. Big, broad, wide point of view looking at something like that. So for here, for this move that we've just had over the course of the last couple of days, looked very clean, like a 1-2, that being a 3, a 4, and the 5 having topping out somewhere around here. Friday completely blew that out and eliminated it. So now we're back into this being an irregular where we're counting waves. 1, 2, 3, 4. You've got your 5, 6, 7, 8. It was your 9, 10, 11, 12. This is 13. So 13 waves are what we're looking at now. If we get 14 and a bounce back up, then we're obviously looking for 17 and 19. So fractional to the upside, possible. Breakdowns, 17,203, 17,165, 17,036, and the big one being 1720. So lots and lots and lots of attention should be left over onto the NASDAQ, on the QQQ as itself. The individual names that make up the QQQ, I'll get into those each individually as the week progresses and as we start heading into earnings on all of them, with Netflix and Tesla being this week. But again, I want to bring it back into the perspective of you want to be good at this. And I mean, when I say good, I mean you want to be right 220, 225 out of the 250 trading sessions you're going to get every year. You got to get addicted. And I mean, you have to get addicted to this. You've got to want to know everything about this. You don't have to want to know it from going out and looking what other people are talking about. That's not being addicted. That's being in the fucking chatterbox, listening to fucking rumors. Get in, do the work, put in the effort. Takes you 35 seconds to update your spreadsheet, and your spreadsheet is the catalyst that gets you into that addictive mode. It's just like guys that hit the gym. When I hit the gym 15 years ago, I was a fat piece of shit. 9 months later, I had six-pack abs. Nobody believes it. I did it. Then I got into powerlifting, started lifting power, started going heavy. And I leave you with it with this, right? Because I can look back to 22 years ago when I got outside of the States and I started this entire life of never working for anybody ever again. I can point back to a lot that I learned when I got there to Thailand. We all went over to Singapore and we did a Tony Robbins weekend. Tony Robbins is giving his Time to Rise Summit this weekend, January 25, 26, 27. It's from 11 p.m. or 11 a.m. Pacific, 2 p.m. Eastern Time, a couple hours every day. It's absolutely free. I highly suggest, out of the 365 days that are in this calendar year, you dedicate those couple of hours that are in these 3 out of those 365 days. You join in with this Tony Robbins Time to Rise Summit, and he will hit you between the eyes with so many different things that you want and you need, not only in your life, but in your trading. And I swear to God, doesn't matter which God you're talking about, it will change your life. It will point you in the right direction. It will eliminate your procrastination, and it will help you to start anticipating rather than reacting. So I've made it through a very long discussion here without having to sneeze and blow my nose. So I'm going to go over to that. But like I say about being addicted, football fans, you know everything about your team. You know everything about every other team. Baseball, same shit. Go across the water and you go to those football hooligans and they will die for their team. And those football hooligans are here to wish you a very good start to your week. Enjoy yourself.
I'll be your dream, I'll be your wish, I'll be your fantasy.
I'll be your hope, I'll be your love, be everything that you need.
I love you more with every breath, truly, madly, deeply do. I will be strong, I will be faithful, cause I'm counting on a new beginning, a reason for living, a deeper meaning. I wanna stand with you on a mountain, I wanna bathe with you in the sea, I wanna lay like this forever, until the sky falls down on me. And when the stars are shining brightly in the velvet sky, I'll make a wish, send it to heaven, then make you wanna cry. The tears of joy for all the pleasure and the certainty that we're surrounded by the comfort and protection of the highest power. In lonely hours, the tears devour you. I wanna stand with you on a mountain, I wanna bathe with you in the sea, I wanna lay like this forever, until the sky falls down on me, falls down on me.
We got 2 points.